Welcome to the New York section of SME, the Society of Mining, Metallurgy, and Exploration, an international society of AIME of more than 13,000 professionals serving the minerals industry in more than 100 countries. Today is December 8th, 2020. Thank you for attending NYSME's virtual symposium titled Strengthening Critical Minerals Supply Chains in North America, featuring the key role of Quebec. This panel's discussion is titled Financing Critical Minerals. The panel's moderator is Cynthia Urda-Cassis, Head of Mining and Metals at Sherman & Sterling. The panel will now begin.
Thank you, Tim. Welcome to this afternoon's panel discussion on financing critical minerals. With the estimated billions needed to fund the development of critical minerals, starting from the ground up, from greenfield mining development through the processing chain, the question of how this development will be funded is a fundamental one. It's no doubt one of the significant challenges to the evolution of electric vehicles and other technologies which are dependent on the supply of critical minerals. Clearly, the ambitious goals being set by a number of countries in terms of reduction of their carbon footprint, including phasing out of internal combustion engine cars in favor of EVs, retiring fossil fuel generation plants in favor of renewable energy plants, and all kinds of technologies being pushed forward in order to address climate change issues. All of these are going to significantly increase the need for availability of critical minerals and the processing capacity of those minerals. This afternoon, we have a panel of three distinguished experts to discuss the issue of how this increase in supply is going to be financed and this increase of processing capability. My name is Cynthia Urda-Cassis, and as Tim indicated, I am a partner at the international law firm of Sherman & Sterling, focused on the mining and metals sector. Our three panelists this afternoon are first coming from three different points of view, three different participants in the critical mineral sector, one from the corporate side and two from the investor side, one commercial banks and one private equity. So our first panelist in alphabetical order is Maurice Belenguer. Maurice has over 35 years of experience in the mining industry, a lot on the technical and C-suite side. Maurice is currently CEO of Bullfrog Gold Corp, which is a Barrick Gold portfolio company, but previously has been with a number of different companies in different commodity sectors. Also in the gold sector, she was COO of Atlantic Gold. She was also with Santa Barbara, but before that, she was with Mirabella Nickel, which is the owner of the Santa Rita nickel copper mine in Brazil. Before that, she was with Goldcorp and Kinross and held senior technical positions. And she's also was previously on the board of Sigma Lithium, as well as on the boards of various other mining companies. Our second panelist alphabetically is John Lamb. John is a portfolio manager at Orion Resource Partners, which specializes in debt equity and streaming investments in all types of commodity companies, base, precious, and also critical minerals globally. Prior to joining Orion, John was an investment manager for a predecessor business of Orion's, and before that was with Deutsche Bank in their metals and mining investment banking group. And he's also served on the board of various mining companies. Finally, we have Leneg Trudeau. Leneg is a managing director with SocGen. She is currently the regional head in the Americas of their mining, metals, and industries finance group. She has more than 20 years of experience in the mine and commodity finance sector before 2017, when she became the regional head here in the Americas. She was also with SocGen, co-head of their mine finance team in London, where she was from 2006 to 2017. in addition to heading the mine finance efforts at SocGen, Laneig covers a wide range, which cover a wide range of minerals and finance products. She is instrumental in pushing forward their efforts for ESG-linked products for the mining sector and for expanding basically the role and supporting the role of the mining sector in the decarbonization efforts and trend. So we will have, I think, very interesting panel discussion, as we have these three representatives of three different participants in the sector. The way we've structured our panel this afternoon is as a roundtable. So there's a series of topics which we thought would be interesting to address regarding financing of critical minerals. We will go through the topics with different of the panelists weighing in on their thoughts on those topics. Before we begin our discussion, though, we thought it'd probably be useful to just address the question of what we mean by critical minerals. That's a term some people talk about critical minerals, some talk about strategic minerals, EV minerals, battery minerals. There are a number of different acronyms that are used. And there are different definitions, right? The United States has listed 30 plus minerals, which they talk about as critical minerals. They've come up with that list based on two criteria. One is minerals which are fundamental to the economy of the US as well as national security, and which are also minerals in which the US is dependent on foreign sources for a very large percentage of their supply. The EU, on the other hand, has a list of 8 to 10 minerals, and obviously has a slightly different definition in coming up with that definition. And you can go to various other jurisdictions, Canada, elsewhere, which have different definitions. But if you look at all of those definitions, what seems pretty clear is there is a core group of minerals, lithium, cobalt, nickel, graphite, vanadium, rare earths, which appear repeatedly on these lists. And so those are the ones that we have top of our mind when we're talking today in this discussion. So let's start maybe with the first topic, which is what are the key challenges of investing in critical minerals in this particular sector, both from the point of view of a debt or an equity investor, and what are the not only what are the key challenges, but what are the key aspects of an opportunity in the critical minerals sector that investors will look at when they're assessing that opportunity. John, do you want to lead off with your reaction to that topic?
Thank you very much, Cynthia. Critical minerals represent an interesting opportunity, but also, very different than other commodities when you're investing as an equity or a debt investor, where the cost curve is more established. The processing is more conventional. It's a different set of risk factors potentially in evaluating these opportunities. It's important as an investor to maintain the same level of discipline you would in other commodities, to make sure that the opportunity is as sound as possible. The other challenge is understanding the end markets and the and the potential customer base. If you have a gold mine, it's a much different value proposition for creating value than a lithium mine or other metals which have different end uses, different flow sheets, and ultimately a different value proposition. So as an investor, it's important to understand these dynamics, because it's not as well fleshed out as other opportunities may be, in other sectors that are more well established. Then again, the opportunity set that exists in critical minerals is very exciting, since there is significant growth opportunity with electric vehicles and other green initiatives that can create a tremendous value for those investors that can be well positioned and find the right opportunities to deploy their capital in today and benefit from rising demand over the coming years.
Thank you, John. Lene, do you, from sort of another side, from another point of view on the investor side, what would your thoughts be?
There are specific risks that we, as a debt investor, we are on the look for, like we would for other minerals, and some of them, obviously, as John highlighted, are particularly exacerbated for critical minerals. Technological risk and time to market are probably the first elements that come to mind, but also the volatility in prices and the challenge sometimes as well to take a long-term view on prices, as the history of this market is really different from the future of this market. So as a bank, it's always a bit difficult to take that long-term view on prices and debt capacity as a result. I would also maybe mention that political risk and environmental and social risk are also particularly exacerbated for a number of reasons, and one of them being obviously the location of the countries of some of those very promising projects in the sector. And I guess all of that means that there's only probably a handful of financial institutions today that are able to take this risk, and for sure things will evolve, but it obviously raises a question in terms of the liquidity that is available to finance the sector and this project from maybe traditional sources of financing, and the necessity to think in innovative ways, about financing, and clearly keeping also your option open in terms of various sources of financing. And I would say as well, and again echoing what John was saying, that one key element is really to understand the whole value chain and the potential of a given project to integrate a specific value chain based on its location, its time to market, the product specification. And I think location and the proximity to end market is actually key in that sector. And as a bank, we really have spent a lot of time understanding battery technologies and how the evolution of the technology could also impact the raw material supply. And the sector is also clearly linked, and the development of the sector is linked to government initiatives and regulator policies, and potential subsidies coming into the sector, potential subsidies coming even to the banks, but also the willingness from the governments to secure supply and potentially break dependencies from certain countries. So there's a lot of added complexity, I guess.
I think that's very interesting, Lene, your point that I mean, if you look at the traditional commodities right now, actually the market is really pretty good in terms of liquidity and available funding for copper projects, gold projects, and other projects with zinc in the more traditional commodity sector. I mean, you have commercial banks, you have private equity firms, like SocGen, Orion. You have a number of other streaming companies. You have commodity traders. You have the agencies. You have the capital markets. I mean, there's a wide variety of sources out there, and there's actually a fair amount of liquidity in many of those sources. But how many of those are actually equipped to make investments and are willing to make investments in the critical minerals sector is, I think, an open question. And maybe, Maurice, you want to weigh in on, from a company's point of view, what challenges you see. I mean, in addition to the points that John and Lene have made regarding investing in critical minerals, a little bit more from the debt, but a little bit on the equity side. Do you think the typical investor groups that the mines and metals sector go to, do they understand critical minerals? What are the challenges you think companies face in trying to bring them in?
Thanks, Cynthia. And it's an interesting question, because what I see, and I've been involved in nickel, in lithium, in gold, in copper, is there's a real lack of historical and experiential knowledge around the critical minerals. And broadly speaking, all stakeholders understand what we're talking about when we talk about copper. We understand the business case of mining a porphyry copper deposit, processing, producing a concentrate, selling the concentrate, and in some instances, changing the process a little bit, having cathode production that are quoted, by the way, in terms of quality, LME quality, 97% or 99%. So there's a series of very well-known factors in the market around copper, same with nickel concentrate, that we don't really understand. The market doesn't have the maturity yet around critical minerals. And also, I think investors are sometimes shy relative to understanding the applications for this mineral or the size of the market. What's the value? What's the supply future demand? So there's a lot of questions, and the market, I think, and investors have been quite slow to adapt. Also, one of the challenges from a producing perspective is understanding the level of transformation you want to do, the processing. Where is the value captured in that transformation? And I'll use lithium as an example. There's limited value right now in producing spodumene concentrate. Is a company better off transforming and going to hydroxide product? So these questions right now are not very, very clear. And I think there's still quite a bit of work to do in terms of assessing that value chain, the level of transformation we want to go to, and what's the end product. That's one of the aspects. And finally, I was going to say, when we have organizations like LME, where there's transparency on pricing, on stock available, there's a lot of market data, I think it's a lot easier to understand, as opposed to critical mineral where everything seems pretty opaque right now. And John, I'll ask you to maybe say a few things about those comments.
Sure. Thank you very much, Maurice. I agree. The transparency that you see on other commodities, I think it'd be great if that eventually makes its way to critical materials. I think that'll take time. As well, I think the other question that is always in an investor's mind is, what is the saleability, the marketability of the product? If you have gold, that an ounce of gold is worth the same in New York as it is in London, as it is almost anywhere. Understanding what the dollar value of a kilogram of lithium hydroxide is going to be a lot more difficult to get your arms around, and location for some of these commodities is important as well as the cost to transport to the end consumer is an important consideration. I think one thing that companies can do to help give investors comfort on these things is have a pretty robust strategy around the sales and marketing of the product, develop partnerships or offtake agreements with reputable end consumers that can speak to the quality of the product, and give investors comfort that that somebody's going to pay you for what the mine produces, because that's where the money to pay for the operating costs of the project are coming from. That's where the money to pay for debt, for dividends to equity shareholders is going to come from, and to have certainty, clarity on that, and at least have be able to understand that we'll make a certain economic return, even if the price in and of itself for the commodity isn't transparent, but we know we're going to make a return on our investment. That's the important part.
And John, I would add to that I believe companies will have to be quite agile. Even the battery technology has been evolving. Now we see demand for products, including for nickel products, that didn't exist 5 years ago. So I think in terms of processing, the industry will have to be quite creative and innovative as well, because I see technological evolution will create demand for different products that we don't even know about at this point in time.
100%, and I do think it's important for all the participants in the industry to stay on top of what the developments are. Be open-minded about different end products, different modifications to flow sheets and operating plans to try and take advantage of these opportunities, because it's important to understand the full value proposition of the product that you're producing or capable of producing.
Great. So let's assume for a minute that we have some adventurous investors who are sort of they're up to speed and they've educated themselves on all of these various new aspects of investing in critical minerals as opposed to the more traditional minerals. And obviously there have been transactions that have been done over the last couple of years in the sector for both on the mine development side as well as along the processing chain. Lynette, maybe I'll ask you, what form do you see investments, particularly on the debt side, likely to take? Are these going to be traditional bank loans? Are there going to be structured project financings? Are there going to be stronger backstop needed? Will these mostly come? Will you need government involvement side by side? What do you see as the likely evolution of how investors willing to invest in the sector? What form their investments are likely to take?
Yeah, look, I think it's going to be a combination of all the things you've mentioned, but generally, for sure, the debt products are clearly evolving very fast, and we now see also that I think is interesting, clear opportunities for mining companies to access these new, green labeled financial product. And it was not obvious when we saw the emergence of this product that they could apply to mining companies. And I'm specifically referring to green loan or sustainability linked loan. And we even see the emergence of positive impact bonds. Green bonds probably still a bit challenging for the mining sector for now, but again, we think that things will evolve, and I also expect. I think we were mentioning earlier that there's not been an awful lot of precedent on the financing side of critical minerals financing or dedicated financing per se, but I expect we will see more mineral projects getting an opportunity to raise more traditional project finance, but certainly as well with more innovative structure, and maybe innovative structure that can attract as well less traditional investor or less traditional finance providers. For example, well, we've arranged and syndicated a very innovative cobalt financing transaction when Pana acquired the Cobalt 27 last year, where we provided leverage against the cobalt stream they had on, or they have on Voisey's Bay. So I mean, clearly that was probably one of the first dedicated cobalt financing, and really arranged on the basis of a structure that I don't think had ever been done, at least by commercial banks. We also currently structuring a project finance for Sigma that Mary's obviously know well, for their lithium project in Brazil. And we're working on obtaining a green loan label for the financing. So you see, it's a mix of traditional tools, but with this new development. Also, probably worth mentioning, we have closed actually a few weeks ago the first green loan for a mining company. That's in Europe, in Russia, to be specific. And we also clearly see an increase and a development of sustainability-linked loans for mining companies. So these loans are basically financings, regular financing, can be term loan, can be RCF, to which we attach specific ESG performance KPI that are tailor-made really to reflect the companies, the borrowers' focus point on ESG matters. So they can be linked to carbon emission target, they can be linked to water use if it's a particular focus, and even to performance criteria. And these financial instruments are very efficient for companies to communicate and promote their ESG strategy, and allows them to really link corporate sustainability agendas to financing strategies. So it's really going a step forward. And obviously the trend has been supported by international and national initiatives and regulations. And we see that probably a bit more for now in Europe, but clearly we see the trend as well coming up in North America. And you see the financing sector really getting organized around all that, and trying to really define shared standard for these new products. So they will become a norm, and this particular sector is, I think, very well suited for this new product.
It's very interesting, Lenny, because it's clearly the case that for the more traditional minerals, copper and other commodities such as that the ESG-linked finance products are, as you say, not too many have been done, but they're absolutely the focus of a number of companies and investing institutions to get these products out and in significant use. It's kind of interesting to think about them in the context of critical minerals, just because at least some of the critical minerals have a particularly they have an interesting relationship with the ESG concepts, right? Cobalt coming, at least right now, primarily from the DRC and the human rights issues that sort of shadow that. You have nickel, which is, at least in the past, had some, with respect to processing, had some environmental kind of challenges that they had to deal with, and so on. But as you say, as governments push forward the agendas which require more critical minerals, and as they push for sort of diversity of supply chain and more transparency, and so you see these minerals being developed, in other jurisdictions, and which perhaps are at least less prone to some of the S issues in ESG. It'll be interesting, and given the use of these minerals being often really strongly linked to climate change positive initiatives, it's an interesting pull and push on using this type of financing. But yeah, John, I know ESG and ESG linked finance topics has been something that you have been focusing on for a while now. What are your thoughts on the use of these kinds of products for the critical mineral sector?
Yeah, I think ESG is always been a critical part of mining, and mining, to some degree, is actually the mining industry's been a leader in terms of being ahead on some of these things over the last 20 years. It's only going to continue to gain in importance, and particularly as several of these critical materials, as you point out, Cynthia, come from areas that do have challenges. I think having both working with countries to improve and companies to improve their regulatory regimes and other elements to support ESG issues, is one priority. Another priority is identifying resources in other jurisdictions. Customers are very focused on where they're getting their product from. You see that, across the sector, and even in even in more traditional commodities, with I think Apple focusing on green aluminum for some of their products, focusing on recycling rare earth metals so that you're not buying those materials from China. Companies are very focused on where they're getting product from. So as producers of metal, we should be focused on the same issues and working to strive to have best-in-class ESG practices. These things take a very long time to develop. I think they're also very indicative of how you generally run the whole of your business. If you're managing ESG very well, you're going to be managing the other aspects of the business well as well in our general experience.
Mm-hmm. Picking up a little bit on something you just said, John, and something that was said earlier, which is, ultimately the end user of these critical minerals, right? The Apples of the world and other, Tesla and the people who are producing the products that the consumers are going out to buy. With this increased focus by the consumers, regarding transparency and responsible sourcing of the manufacturers of what they're purchasing, so that they know that the products that went into what they're buying were not, did not involve child labor, were environmentally appropriately produced, and all of those kinds of things. The focus on traceability of the different elements that are going into the end product. What role do you see for the end users in terms of, I think it was mentioned earlier, maybe Maurice, it was you who mentioned that, or maybe it was you, John, I can't remember right now, having long-term offtake contracts or some sort of offtake contracts, which can support the business case, but also from the end user's point of view, the end manufacturing user's point of view, can help them in transparency and traceability and responsible sourcing kind of disclosures that they are making out to the public.
No, that's a great question, Cynthia. I think there's an important role for the end consumers here, particularly as I think they're uniquely positioned, understanding the value proposition that critical materials represent in their own supply chain, and their own value chain. If they're serious about creating more more products, it's going to be important to have that actually come out of the ground in the form of mine. So working to invest, as you have seen, in investments within the automotive sector into lithium and other critical battery metals. Putting that capital in is going to be important. It takes a long time to bring a mine from discovery into production, particularly when in the critical materials sector there might be unique challenges you need to solve to get a successful project underway. So I think it's important for consumers to partner with companies in some form or fashion and help provide capital that will give them access to these critical materials and ensure the long-term success of the project. As one of the biggest obstacles that the projects often face is the financing of it. You can have a spectacular mine, but if you run out of capital during construction, it's going to be it's not going to get into production potentially. So it's important to have strong financial partners behind you, and to see these materials come to market. It's going to be important for customers to be at the table, particularly where they're the ones that are ultimately setting the level of demand.
Mm-hmm, mm-hmm. And Maurice, from looking at it from a corporate point of view, what do you see in terms of how realistic is it in the near term that the end users, like the Apples and the Teslas of the world, that they will go upstream and they will either make investments, make equity investments in mine development, or debt help bring in some of the financing really directly, or maybe enter into, long-term supply contracts, which then can be used by the mining companies to go raise capital, because they can show that they have, there is demand and there is a price and there is going to be, that supports the revenue of the business case.
Well, I think at this point we have interesting play on market forces in the sense that I don't see end users going fully vertically integrated, meaning Tesla doing nickel mining, just as an example. So therefore, in order to secure the raw material for their product, my opinion is that unless they participate, and whether it's in prepaid offtake, some kind of joint venture agreement, some kind of participation in the capital cost to develop, that we won't be able to go ahead and develop these projects. As a mine developer, I would say the small companies with the exploration and technical execution capability to put these things in production will need the end user to come in no matter what. Otherwise, there will not be development. That's my opinion. It can take many forms. It can be an equity investment. It can be prepaid, sale forward. It can take many forms. But I think at this point, those kind of investments will be necessary to see further development of mining operations.
Yes, I would think that is going to be pretty important, just because of the uncertainties that you've all been mentioning, and the lack of familiarity and the concern that a lot of investors, particularly debt investors, have investing in critical minerals as opposed to, say, copper or gold. That there's just going to be greater support needed around the development process and the certainty of, or the greater certainty of success. And that's really, end users are going to be an important element of that. And I guess another important element of that, and this is something, Lanaig, I'm going to pick up on something you said earlier, and so ask your views and then Maurice's views on this, which is the role of governments. I mean, clearly, governments in terms of setting policy, right, setting goals on when they're going to reach, net carbon neutral position, or when they're trying to meet various other climate control targets. Those policies obviously will affect the development of this sector, and that will push companies to develop products which drive demand for critical minerals. But also, what other role do we see government likely to be taking or needing to take to help this sector develop? I mean, is it tax incentive programs like they had for renewable, wind energy for a long time and still have? Is it programs supporting R&D in the sector to get people more comfortable that this innovative technology? I mean, one of the strong suits for financing for the mines and metals sector for a long time has been tried and true technology. When people invest in the sector, they're not taking technology risks for the most part. That's one thing that, they're taking a lot of other risks, but not technology risk. Here, you have technology risk, and it's constantly changing, as you pointed out, Maurice. Is it financing programs, whether through the Department of Energy in the U.S. or the DFC for overseas projects, or the government of Quebec, I mean, where they're actually making loans or making equity investments in the sector? What role do you think that governments and these government agency lenders and investors could take that would really be helpful to this sector and to the development?
Yeah, no,
No, Lene,
sorry.
go ahead, please. No, you
Sorry,
first.
no, absolutely, no question that I think they will play a role, and I think across the spectrum that you described. So I mentioned earlier, I think the willingness on the supply side, maybe to influence sourcing, and on the technology front as well, program to subsidize research, but also potentially, provide, some form of guarantee on these new technologies, as we've seen, as you said, in the renewable sector, for example. And from where I sit, I see them also definitely playing a role through the governmental agencies or the multilateral agencies to really boost liquidity. As I said before, I think for traditional commercial banks, it might not be so easy, and clearly there would be a strong benefit, and commercial bank would draw a lot of comfort to see, the agencies, the multilateral, the ECA really supporting this type of project. And I think that would be a good way for commercial banks as well to, learn and get more comfortable. And then for the sector to really mature into maybe more traditional financing. But it's also I think at the commercial bank level, all the incentive I was mentioning before, banks are just, starting to get organized around, access to some of the subsidies and favorable balance sheet treatment for certain type of loans, or certain type of financing certain type of sectors, which help achieve specific also, climate change objectives that, banks themselves have fixed. So I think it's really a combination of elements, but it's obvious that yes, they have a strong role to play.
And Maurice, what do you see from the corporate side? What would be most helpful? What would you hope governments are looking at doing for this sector at the moment?
I think they can play a role financially, supporting projects, exploration, the transformation, and also recycling. And I would also include research and development, because I think that's a very key component. But on the exploration side, it starts with making data available, but also helping promoting exploration activities. And that can be done through attractive taxation and simple instruments such as flow-through financing, such as we know it in Canada. And that generates a lot of exploration activity, which will lead to more discoveries and more critical minerals being available. So taxation is one tool I believe governments and agencies can use. And on the transformation and processing, and which is directly linked to innovation, finding new pathways, new processes, helping with the evolution of the end product, the industry needs research and development money. And that support is key, because if you put yourself in the shoes of a small company trying to develop a new process, to put together a demonstration plan to show that the technology will give you an adequate product, or will give you what it's supposed to give you. Building that small plant cost in the $50 to $100 million range. And most companies do not have the financial capacity to do process pathway development and really making sure that there's a real evolution in those products. So I think the R&D support linked to innovation strategy are where governments can come in. and make a huge difference.
Thank you, Maurice. And I think your point is one that echoes something that's been coming up repeatedly throughout this whole discussion, which is that it's important to focus not just on the mine at the mine site and developing those mines, but it's really the whole chain, the whole processing chain, all the way up to the end, or certainly that first several levels of the processing chain where you convert what is pulled out of the ground into a product which is useful, as you say, whether it's a concentrate or some sort of mineral product, or you convert it into more of a chemical product. It's this is an evolving area, and we're going to have to continue to watch this space. I think we're almost out of time for our panel, so maybe some last thoughts that each of you has regarding critical minerals, in particular, how the financing aspect of the development of critical minerals. John, I'll start with you.
No, thank you, Cynthia. Again, thank you for inviting me on the panel. In conclusion, I think from my standpoint as an investor, this is an exciting opportunity. It is an important part of our strategy at Orion to identify the best opportunities to put capital to work in this sector, because there's going to be a lot of value created, as we're on the start of some unique, very cyclical trends that is going to pay dividends for those investors who can identify the good opportunities here.
Great. And Lynette, you have final thoughts you'd like to leave with us?
Yeah, sure. So thanks a lot as well, Cynthia, for inviting me here. And yeah, I would say as a bank, we're very excited about the opportunities that these new developments offer. And we really believe we have a role to play also as enablers and contributor to the change, and really support our clients in their growth and in their investment. As you just said, I think, yes, the integration and understanding of the whole value chain is key. I fully agree with that statement, and that's really something we've spent time to understand, and we've actually rebranded our team from metals and mining to metals, mining and industries to really reflect this new trend and be well positioned to really accompany the clients throughout the chain. And I would also say that looking at developing, really ecosystem, where you think about, the positioning, the manufacturing close to the supply, where you can access efficient green power, be close to your end users, will also be a key success factor, actually, in the development of the industry.
Great, thank you very much, Lynette. And Maurice, last word goes to you.
I think there'll be incredible opportunities for economic development. And I see some regional opportunities will pop up where everybody will be able to participate in that green economy. So I think from my perspective, what the mining industry needs is a few visionaries that who will make a great difference in the future.
Great. Well, thank you. Thank you, Maurice, and thank you for leaving us with a very optimistic thought, which is the visionaries which will come in and take us, really to the next level. So thank you all of our panelists for being willing to spend their time with us this afternoon and to participate in this discussion and share their very thoughtful comments on the topic of financing critical minerals. If anybody has any questions or want to follow up on anything that was raised during our discussion today, the contact information for the panelists is on the last slide, and I'm sure we'd all be delighted for you to reach out. So thank you, everybody. Thank you very much, panelists, and good afternoon.